What's going on, YouTube family? Back with another video. Guys, it's been a minute since I dropped a video. I've been renovating my office space, so I had to do some transitioning back into this YouTube flow. But we are here. Before we get started, guys, make sure you guys subscribe to the channel, turn on notifications just so you don't miss. I am going to start trying my best to drop these videos every Sunday. But I also have a private live stream that I will be doing Monday through Friday during the New York session. If you want to get access to that private live stream, the link is in the caption of this video so you can get access to that. Now, before we get started talking about what's happening this week coming up, let's just kind of backtrack of what happened last week. So last week Powell spoke. He didn't really move the markets much. He had a speaking engagement event at Harvard, I think, where he pretty much dived into economics. He talked kind of about how the current state of the economy is, but it didn't really create any volatility in the market. Then we saw Japan's Tokyo core CPI come out a little bit lower, but we also had some push-ups in some other areas. We saw CPI fall in Europe. The U.S. consumer confidence actually came out much hotter than expected. Last week was a pretty strong week for, I don't want to say for the dollar, but for it built a strong case for the Feds to continue the narrative that the markets are calling for a rate cut. Now, I will say this. If you look at the data, it does look good surface level, but beneath this, there's still like some weakening areas, especially with the NFP. I kind of forecasted that NFP was going to come out strong, actually hot. I was expecting 80K plus, which we got 178. There was a nurse strike, I think in New York, that was going on. That is why the data was bad. And then there was some other factors, some seasonal adjustments still. So I definitely think that the April data that's going to show up in May, the first week of May, this is going to be revised down drastically. Also, with the employment market reducing, that also fed into the unemployment rate dropping. But what I can say, surface level, this looked like a solid U.S. economy. But the other factors that we have taken place don't support this to be something that's we will see continuously. At least if we still get a stable NFP in April, we're definitely going to start cracking going into the summertime, going to the end of the year. That's pretty much why I mean, I know the weekend, I mean, on Friday, the markets were closed, but if you looked at the FX markets, the markets really didn't react to that strong data because, yes, it looks good on top because of reasoning of factors that are just seasonal or that are time stamped. It's not like it's going to be a long term positive effect in the labor market. I don't see that happening, but so far, so good. And then this week we have not much on the economic calendar, but let's see. Not much on the economic calendar. We have CPI on Friday. I'm sure we're gonna get some push up in that. We'll talk about that as we go in this video. But we have the Fed's minutes on Wednesday, and then we have also core PCE that comes out on Thursday. So some data this week that can really add some fire to the dollar strength, especially if we get this risk off position. Now, I made some notes, guys, as I go through this. We're gonna talk about, if you see here on the watch list, we have DXY, S&P, Bitcoin, Euro USD, GU. These are the markets that I'll go through in the outlook. But I have some notes here on the side. I did my market research to build my directional bias for this week. So yeah, let's talk about it. So biggest thing in the markets right now, Iran, US, Israel, Middle Eastern conflict, right? This is causing the markets to start to price in higher for longer, or at least high inflation for longer. Even if the Fed still cut interest rates, which I don't think that's going to happen anytime soon until we start to see the labor market weaken harder than inflation going up. Now, Jerome Powell did say in his press conference that they don't think that inflation is going to stay up forever. Once the conflict in the Middle East die down, then inflation obviously will fall again. But we don't know. We'll just have to play it by ear. We don't want to really jump to conclusion, or even get confused trying to take the textbook reasoning behind high oil rates and things like that. Let's just take it step by step. So the Feds are pretty much frozen. JP Mortgage confirmed a hike is unlikely, so don't think that this is going to be a DXY like super rally. There is definitely a ceiling in DXY, and I have DXY over here pulled up on the screen. So if we look at this bad boy, let's start with the weekly. I like to start with the weekly going into the week so I can see where the previous close and the previous close were, the open and the close, and even the wicks to see how low it went. So last week we went as low as 98.83. Well, the week before last. Um Last week the lowest we went was like 99.30, and then the highest we went was like 165, right? DXY has really been running into this resistance wall of 100 for a while. If you have been following me for a while, I've been trading DXY since God knows forever. At least just knowing the movement from 2023, I bought it a couple times, sold it up at 108. We fell back down from that 108 rally, and we've really just been trading in this range from like 101 to like 95 for like the last, I would say, almost a year. So DXY really hasn't done much. Donald Trump has been pushing this agenda to keep the US dollar weak just so it can help with US exports. But his decisions to invade Iran with Israel is kind of costing him that pro growth narrative that he wanted to run. Now, I'm not this is not politics, we're just talking about economics. Now, with that being said, looking at it from a technical level, we're working with the range between 98.85 and 165. So, let's hop down to the daily. Let's take a look at the daily. So on the daily, we pretty much was consolidating a bit last week. If I draw my fear from the low to the high in this range, you kind of can see how that's been playing out. So can we push up next week? We can. If we look at my notes over here, uh, Friday CPI drop is the real catalyst next week, right? Big banks are forecasting 3.4 year over year. If we look at Forex Factory, Core CPI, they're all expecting a push to the upside. Year over year is the biggest one. Jumping from 2.4 to 3.4, that's like insane. That's a whole percent. So that would definitely fuel more DXY strength. Now if we break above that 100 level, finally, if we can at least close above this range, that will be actually good for the dollar, or at least for dollar longs. But if we extend this bad boy to the upside, let's just see how high this can break out before we get another move to the downside with DXY. This is a trick that I like to use. If you've taken my mentorship, you pretty much know what I'm doing. If not, I highly suggest taking my mentorship. So if we break out of this 100 level, our next highs is around 101.06 and 101.69. Usually you want to get that higher high before you even think to get like a sell back low. So I mean, we can probably play something out like this. I'm not gonna, like I said, I don't want to jump too far ahead. So this is my peak of this cycle of this next breakout. So the dollar can rally up to like 101.66. It can go higher. I mean, if we look at the weekly, if we zoom out a bit, the next big, oops, I'm sorry, guys. The next big major resistance is really at that broken support, which is right here, and that's at like 103. So we really can go high. But I, like I said, y'all, I don't think this is gonna be a super massive rally. That's still not a big move in the dollar coming from 100 to 103. That's only like a 3% move. So that definitely will fuel some some moves in Forex pairs. So overall, I mean, the dollar is still kind of strong from that weekly range. We are trending up going into the week. Now, Donald Trump made a statement over the weekend, actually today, stating that if Iran don't make a deal by Monday, Tuesday, the power plants, the bridges all coming down. London Bridge is coming down. Do I think he's gonna move with that? I think at this point he have to back up these claims or these threats that he keeps making, because Iran has pretty much came out and said, "Hey, the guy's trying to manipulate the markets with his narrative." So, he said this last week. Oh, I'm gonna give you guys 5 days. If you don't, then we're gonna do this. Nothing happened after those 5 days. So at this point, Trump is a politician. He's gonna use his platforms to control the narrative, control the market. You just don't get caught in the whipsaw in the whipsaw of his narratives. And I also wouldn't suggest buying into them too much. But do I think this could be a chance where he actually say what he mean? I'm sorry. Is this now the chance where I think he's actually gonna do exactly what he says? I think so. I think so. Tension is building. Iran really isn't backing down. So yeah. Then also with that CPI on Friday, tariffs already adding a full percent to it. So now we're finally going to start to see that tariff inflation. If you've been watching the Feds and different Fed members speak, they have said we haven't seen the tariff inflation, but this is probably the time we start to see it. Crazy thing about it though, retail sales kicked butt last week. And that can fuel from income taxes coming in. Donald Trump said that they are pushing out heavy tax returns, so the consumer confidence was up, and I guess that's where it's coming from. The US has definitely been in a K-shaped economy, so it's really just been like the rich has been keeping the economy up. So with the lower end of the spectrum to getting tax income returns, that's probably why that retail sales was up. But like I said, that stuff looks good on surface level, but beneath it, Americans are really stressed. I think every country is stressed, from South Africa to Europe to the like everywhere is stressed, right? But yeah, that's the dollar. Nothing too crazy. Everything as expected. Now let's take a look at S&P. If we look at X&P, let's go to the weekly. I kind of on some of these I already outlined it because I was looking at this earlier. But let's zoom out some. So if you've been following me for a while, I've been claiming the ceiling for X&P is 7,000. I said it on Twitter. If you can go back to it, let's see if I can find it. Oh, let's see. Let's see. Booyah. So back in October, I said that the S&P ceiling is 7,000. We still haven't. That's the ceiling. It literally pushed to the top, and it's been falling. So we finally decided to break out of that little range that we was in from what was that 65 to really 7,000. We finally broke that support here, which is right around here, which is that previous support, which is now acting as resistance from last week that I checked out. So 66.49, and then the lowest that we went last week was 63. Markets started to bleed a bit. Now let's zoom down to the daily. Now the white line here as we go through it is the 50-day moving average. I like to use the 50-day moving average when I'm intraday trading, looking at structure. It helps you kind of like identify the trend. So if we're below it, we're still in a bearish movement. If we're above it, we're in some bullish movement. So right now we've literally been trading below the 50-day since the end of March, when all of this Iran stuff pretty much broke out. At the end of last week, we did get some move up to the upside on peace taking place in the Middle East, which, like I said, price had already felt low. So you should have expected a nice breather back up to the 50-day moving average. Now, can we go higher? Yes, we can. But even if we go higher, I definitely will look at that as opportunities to sell, unless we like close above the 50-day, and then it will show that buyers are back in control. But right now, going into Sunday, I'm curious to see how futures are gonna open. Just from the weekend, we did have Trump, like I said, come out with that statement about Tuesday, so we may get a gap up. I mean, I'm sorry, a gap down. Um, but he also said that Iran is gonna make a deal by Monday, so that probably give us a gap up. If that give us a gap up, like I said, look for sale opportunities in this bad boy. If you want to join my weekly, my daily private live streams, then you will see if we get some opportunities as the days goes throughout the week. So make sure you register for that, for my daily live streams, because they will be beneficial for you starting to leverage in on this analysis. So yeah, nothing crazy. The high is 66.50, the low is 63.17. That's the range that we're in below the 50-day. Don't think we're gonna push up above really 6,800 no time soon. So yeah, still kind of trading down. If you go to the weekly, the next break, if we do break this support, how low we can go is about 61 and bounce. That makes sense. Right, right at that next resistance that got broken. So I wouldn't be surprised if we can fall a little bit lower. So yeah. But don't sell when the prices start to fall. Sell when they rise. Just know that. So that's the range we're trading in on S&P. Nothing too crazy. Bitcoin, guys, this bad boy still trading on the weekly. That high that I've been looking at is right around 75K. If you know, I sold this bad boy at that 75K, but I also sold this at 120, like up here. So both on X, caught the signals on them. But then like 2 weeks ago, I told you guys, hey, Bitcoin nice short at 75. That's just that range that we've been trading in. I've been quite bearish on Bitcoin since October of last year when it was at 120. This is where I pretty much was telling y'all, hey, sell that bad boy. And it's actually been planned out like 100%. So yeah. So really nothing right now. Going into the week, we are starting to weaken. Even on the weekend, let's look at it. It's kind of flat. On the daily, we are below the 50-day moving average, so still bearish. Wouldn't be surprised if we can push back up to 75. Just being honest, that is a support that got broken, which is now resistance. So hey, no shocker. But I wouldn't suggest buying it. Your risk to reward is just not even in your favor. In this range, the low is like 60 and the high is 74. Price is at 67. Best thing you can do is sit it out, wait for a break to the downside. If it pulls back up, then look at shorts at that support that got broken. That will act as resistance. So yeah. Euro USD, I mean, same thing. With the narrative of the dollar being bullish, if we look at it on the weekly, this is the range that we're in. The high is 116.34. That low is right around really like 114.30, really 1400. I'll throw that right there. Whole numbers, market love whole numbers. So about 1650. Market love these whole numbers. So yeah, we are still trading low in this range. I wouldn't say this is a buy. I wouldn't buy it only due to the fact of the the fundamentals. Especially going into next week. We probably can sell a little bit lower if anything, just consolidate, but I'll look for those highs to short. Still below the 50-day moving average on the daily. So, hey, too easy. GBP USD, same thing. Euro USD and GBP USD price actions usually the same. Quite. We already broke this support on the weekly. This is extremely bearish. That's the weekly, previous weekly high, and then the previous week low is here. So we are already down. Now, in this example, we may get a push to the upside because it's so low. So markets love to consolidate. So if anything, we can push back up to that 50, come down. But still, again, overall, I'm bearish because I'm bullish on DXY. I'm also just bearish on the UK economy, right? They're not hiking rates. They're definitely cutting rates. So, yeah. We've been trading below that 50 days. So that is truly acting as a some resistance since a couple weeks ago. So yeah. Now, USD JPY, let's pull up my notes. So over here on US JPY, Bank of Japan normalization confirmed and acceleration. 10-year Japan yield is near 2.3. These highs are like crazy. Yen strengthening, pressures building, carry trades getting expensive. Now the carry trade is getting expensive. UJ is up. If you've been following me for years, I've been buying UJ since it was at 140 in 2023. Still swinging that position. Let's look at this bad boy on the monthly because my community, we ate these yen pairs up. We've been eating these yen pairs since here. This is where we were buying. We were buying literally here. 2023, 2024, and 2025. Now we are literally pushing back at that intervention level. Do I think they're going to intervene? They're not going to let you know when they're going to do it, but they're definitely going to do it. Probably be this month. They are planning to hike interest rates at the end of the month. That kind of makes sense, especially because I'm expecting stocks to fall, and if they hike rates, global markets are also gonna feel that. So, it's definitely gonna bleed outside of Japan. So, with that being said, Japan investors can start earning more at home than hedging on U.S. Treasuries. So, the yen is extremely low. If we look at JXY, let's take a look at JXY. It's been low for a minute. Yeah, it's been low. So I think we can go a little bit lower. And then start exiting those longs, especially with the dollar having that cap. I don't think the dollar. I think this is probably going to be the last month of a bullish dollar, and then we're going back to that weak dollar phase that Trump is going to push. That's only if Trump attacks Iran's power plant, it's definitely going to volatility is going to spike. But Iran is gonna have to. They're gonna have to accept that loss. But it's not really a loss because America is gonna take a huge financial loss too, especially with inflation, all of these things. So nobody is gonna win the war. It's gonna look like America won the war, but they really didn't because they also got some consequences that comes from their aggression in the war. So the UJ is I will not start buying this high, guys. Do not like this is one of those trades where you just have to sit it out. But you can start looking at some opportunities. Let's go look at the weekly just so we can see the previous week. Pretty tight, hey. Markets are not letting that boy get to 160. So we really just stuck in this little range here since the last month, really since last 4 weeks. So can we break out? I mean, if we look at the Fibonacci, if we look at the Fibonacci in this range, let's go from the high to the low. Let's pull this bad boy up. 162 could be a nice little peak, and then we probably can get that short. But like I said, I'm going to follow the dollar with this. If we go to the monthly, we did get up to 162 before. So no surprises. If anything, we need to break above this high before we get some heavy selling pressure because we've been there before. Literally been there before. So yeah, that's that. Nothing too crazy. But I am looking to short these yen pairs, y'all. And buy. Oh, that's going to be nice. AUD USD, I mean, clear as day. We got that a sniper shorted this bad boy at that high. Listen, if the war escalates, commodities gonna take a hit. Aussie is gonna fall. We already starting to see pressure in Australia being put on Australians. So I'm not really bullish on this at all unless we can get much lower, at least below the 50, and then that's probably where just being honest, y'all. I don't really care to buy this. Just being honest. But we probably get something like this, pull back to that and just consolidate. Because again, the dollar weakness can send this higher. You get, but right now the fundamentals on a weekly bias don't support the Australian dollar being strong. So right now the shorts are winning. If you want to find out how to ride this intraday downtrend, join my daily live streams. NZD USD, hey, this bad boy, I've been shorting these bad boys for years. So nothing new here. This bad boy is still trading down, broke some support, hasn't come back to retest. We do have an interest rate decision this week. They probably hold, yeah. They're planning on holding on Wednesday. I mean, since it's falling, let's look at the previous high and this low from last week. And then let's go into that daily. We are at a nice support. So no shockers if it pulls up back to that 50 on that interest rate decision, or if we break lower, come back, retest, and fall. I don't think we're going to break that low, but you get what I'm saying. Overall, I'm still bearish. Look for highs in that bad boy to take advantage of on the 4 hour at least. So yeah, we can probably push back up to that 50-day. It's been trading below it. USD CHF, this is the one. This bad boy has been gaining its strength after a solid, long, bearish cycle. Switzerland is starting to go into the negative interest rate zone. So that's gonna put pressure on the Swiss franc. They also said, hey, the SNB said we are gonna intervene if our currency get too strong. That's your sign to look at this as opportunity, especially with the dollar building up strength now. So I did buy this bad boy, and I've been buying it for a minute. I think we're gonna break that 50 on that bad boy because we can go as high as on the monthly like 86, honestly, because it still is a bear market, but it's so low that it needs to have that breather back up to that monthly 50-day. So yeah, nothing crazy. Still nice opportunity. Now the only thing I would say is coming into that on the weekly, you are buying it at a resistance. Yikes. So watch it during the day, during the week, by the day. If we do get some weakness in the dollar or even opening the markets on Sunday coming up in a couple of hours. So if you're watching this video, just put your eyes on it. If it gaps down, that could be an opportunity. But I think we're gonna break this 50-day on the weekly, and it's gonna can push up to probably at least to this support that got broken because we never retested at these support levels, right? So we can at least push back up to there. But as high as like 86.31, I'm gonna ride that bad boy up there. And then USD CAD. This is one I'm not really trading this. There are two. I look at the USD and the Canadian dollar like brothers and sisters. It's like one of those things. US is number one um producer of oil. I think Canada is like number two. So if oil stay elevated, this is just gonna probably consolidate. If anything, because Canada is weakening in some areas while the US is strengthening, obviously it's still on the bullish side. But if we look at it from the weekly, let's look at that previous. Yeah, this is straight bullish. So I mean, it's not bad. I mean, like I said, we just broke out of this resistance, so probably expect to pull back to that 50. Let's go to the daily. Yes, still at a resistance, so probably expect to pull back, buy it again, but I wouldn't try and sell that. Not at all. And then the last one we got before I wrap this bad boy up, we pushing over 30 minutes. We have oil. Everybody is talking about the oil trade. What is oil is going to do? What is oil going to do? Here's the thing. When you have these conflicts that are controlling the markets, technical analysis really doesn't help, right? Because it's too much manipulation. So the biggest thing that I would say take away from this is, how were the markets with oil before we started to get all of this fuss, right? So if we go back, oil was really trading below, was just trading low, right? So until we get back into like this bearish channel, I would just say don't expect to sell. Or, well, I don't want to say don't expect to sell. Don't expect markets to go back to normal like that weak dollar. The dollar is always going to lag behind oil. Now, how high can oil go? Is the next question of concern. If anything, before we get a next bit short, it's probably going to have to break above that high of 119. Now, some economists are expecting oil to go to as high as $200 a barrel, which I can see that happening because, I mean, markets do just go up. I don't see oil going to zero anytime soon. I don't see oil going back to $60 anytime soon, especially with the conflict in the Middle East. But if we wanted to look at it from a technical perspective, and we wanted to look at that high that we reached, and then we can look at that support of that low right here where it fell, where they manipulated the markets, and we use that as our like a range, and we use our fibs. The next big high for oil I can see is 144. If we do get some manipulation at that level, then we can even fall back low to 177. So it's like, even if you're buying this, it's just use oil right now. If you're not in it, I did get me a nice entry at 91, like right around here. So I am up in some nice profits. But don't be too greedy with this, because Trump is going to manipulate those markets. Easy dump SPR. Like, it's so many things that he can do. So I wouldn't get caught up, one, with too much leverage buying oil. If you're going to buy it, I would definitely wait for pullbacks. But selling it, no time soon, unless we get to 200. I don't even care if I miss the trade. If I take my profits on it, on my longs, I'm not even interested in selling until we get to 200, if I want to make money from it from a CFD perspective. So yeah, that's all I got for y'all today. Let me know what y'all think in the comments. Would love to hear the feedback. Again, if you want access to my daily live streams, the link is in the caption of this video. But yeah, let me know in the comments what you guys think.